Hey friends, you might be.
Hey, I was muted.
What's going on? What's going on?
Howdy.
Get some people in here. It's 6 o'clock. All right, guys. I appreciate y'all being here. Give it like another minute or two. Let some people roll in, and then we'll get started. Man, I don't think anybody can hear me right now, or you can't talk back. But I was really surprised that interest rates went back up again, and we were so excited for interest rates to go down when the Fed made their decision, but they keep inching up. So we'll talk about that a little bit today. All right, we got a couple more coming in. This is great. This is a good turnout. What I'd like to do is we're gonna get started. I'll keep letting people come in as they let me know they're in the lobby. What I'd like to do though is I'm gonna go through some statistics about what's going on in Austin. And in Austin, it's just it's a general snapshot of what's going on in the market. Of course, each neighborhood has its own kind of microeconomy, if you will. Some neighborhoods are saturated with listings and some you can't find anything, right? And they're all different, but you'll get a general idea of what's been going on in Austin because the changes since 2020 2021 are pretty far reaching, and so we're going to dive into that a little bit. I'm excited that you're here. I'm excited. I love helping people buy houses. I'm a big believer. I call it the American dream. I just think it's still real. Owning a home is a great way to it's a great financial instrument for many reasons, but number one is it generates wealth over the long term, right? It's not meant for short term get rich quick schemes or anything like that. But it's a place to park your money. You get into disciplined savings, disciplined spending. You get to own a home, and there's the emotions that come with that and the pride that comes with that. It's just one of my favorite things that we get to do here. So let's go ahead and get started. Um, I'm going to just make sure I'm not missing anybody. If you have any questions, just pop them in the chat, and I would love to get to them. It's impossible to cover everything all at once, but I'm gonna do my best. Right now, so the most common question we hear is, should I buy a home right now? And there's a big aha that I had in putting this together actually of what I think about that. And I think you'll be excited here. So we're going to talk about what's really happening in Austin's market. We're going to talk about interest rates and prices and some of the options that are available to you as a buyer explained. We're going to run through a quick run. We're going to do a quick rent versus buy scenario, and then how buying builds wealth long term. And I think that's one of my favorite things to talk about. And it's so cool because when you buy a house, like, you have to work so hard to get your credit right and get your job. And a lot of people figure that out pretty early. Thankfully, we're pretty informed on all that now. But you save your money and you get to hunt around, and you have a partner or a spouse or somebody that you're doing with, and you have other decision makers in there, and you go through this kind of exercise of like priorities. And it's just really neat and fun to watch people and couples and families and single people just go through this process of making decisions, figuring out what the things that matter more than others are, and then just being able to educate and help and just be a really professional thought partner for buyers. It's a huge honor, I think, as a real estate agent to be able to do that. So let's talk about what's going on, Austin. I love charts. Okay. So I'll do my best to explain these right now. And here's what this is that you're looking at. This is active listings on the market in Austin right now. And I like to break it out by the week of the year, so each year gets its own color. This is important to me, I think, because it shows seasonality is real it's real in a real estate market. I think it's often misinterpreted. So we'll talk about that a little bit. And then you'll see, like, just from 2023 to 2025, the increase of available homes to buy is like double. That's not doubled, but it's gone up by 50% or so. I mean, it's massive, right? So of course it's a buyer's market. You have a ton of options. Now, it doesn't mean it's a buyer's market everywhere. All right. It just means that it's generally a buyer's market. We'll talk just about generalities now, and then we'll get into some of the fun stuff with owning a house. Okay. Some of you that are coming in right now, I'm going to go through this, the market, the statistics. We're going to talk about some of the pros and cons of the market right now and being in the marketplace right now, interest rates, options, and resources. And then just if you have a question, just drop it in the chat, and I promise that I'll get to it. So I really appreciate you being here. We're already rocking and rolling. We may not take the whole hour, but we'll see. Sometimes I can not stop myself from talking about this. Buyers have more homes to choose from than in recent years. In fact, that should say ever. You have more homes to buy, to choose from right now in Austin than we've ever seen before. Inventory has skyrocketed across the Austin MSA, and the Austin MSA for us is basically from like, I don't know, Gerald down to New Braunfels or so, and then just kind of and then everywhere in between. So it's just a big glob in the middle of Texas. Prices are down. Now, this is pretty interesting. Prices since 2024, 2021, prices are down in some areas up to 50%. I'll talk a little bit about why, some of the unknown reasons why that is, but prices are down up to 50%. Generally, it's about 30%, give or take a few points. That is massive. That's a third of it. The prices have come down. It's caused a lot of pain for a lot of people. You can think what you want about it, but it's not fun. Okay. And days on market is 68 days to sell. Now that's an average number. And we need to be, pay attention to that. That does not mean that a deal is a good deal or a bad deal, or it's not a good house for you, or it's not a good house for you. Days on market, there's lots of things go into pricing, supply and demand, right? So if somebody starts too high, that obviously will make you stay on the market longer. Some people too low. So there's a lot of skew in there, but we use it as just a general idea of how long it's taken homes to sit on the market. How you get a deal on a house is not by looking at this number. You cannot automatically assume that you're going to go get a good deal on this house because you don't know if they just reduced the price. When was the last time they reduced the price or made an upgrade to the property, or news came out about a neighborhood or a new investment going on, right? There's too many variables that go into it. The best way to find out what kind of deal you're going to get into is learn the market. I'm going off on a tangent, but this is a good one, is to learn the market, learn the specific market around that house and in that neighborhood. But it's to get into conversation with the listing agent and find out what the scenario is. What's the motivation behind the seller selling? What's changed? What hasn't changed? And then comparing it to if it matches up or there's some kind of alignment with what your motivation is as a buyer, right? With a real estate agent, a skilled one and one that knows what they're doing, they know how to do that. All right. So you can't just get on Zillow and say, oh, it's, been on the market 120 days. That's double the time. I'm going to offer them 50% off just because of that. Like that's not success in the home buying world. Okay. We have more price reductions and we have more homes that are coming back on the market than we've ever had before. Now, when a home comes back on the market, that means that buyer and seller agreed on a price. They got into their agreement based on their price, and something happened. Inspection showed some major problems. Another home came on the market that the buyer wanted to buy, lost a job, anything could have happened. So the house comes back on the market. But we watch that too, because we want to know what's the psychology of the current buyer, how skittish and cold feetish and, all these things are they getting into right now. And from a seller perspective, it's good to know what in that neighborhood, what buyers are doing. Are they just putting their toes in and nibbling around, or are actually they serious about buying a house? Okay. That doesn't really affect buyer psychology that much, knowing this information, but it's just nice to know. I made a little quote here. Not every area is the same. What we see is generally more established neighborhoods hold their value stronger. And that's because generally you have bigger lot sizes, you're closer to downtown, you have more established schools and infrastructure, and you can hot shot to anywhere in 20 minutes, as opposed to being on the fringes where it takes, 3 hours to get to the other side of the town and things like that. So the more established neighborhoods, typically they hold their value stronger. Okay. That's why they're more expensive. Any questions so far? We good? Am I going too fast? This one, I love this. This is one of my favorite charts just for general purposes, because it shows you the pattern of the real estate recession that we're in. And what I'm learning and watching the numbers for just Austin in general is that it looks to me like less homes will sell this year than last year, which is a surprise for some people. When things got out of hand and during COVID and right after COVID, or however that's described, Austin was the city du jour for United States of America, and everybody wanted to pour money into real estate in Austin. And I mean everybody. So what happened when interest rates went up, so we had investors buying houses to rent out to people because jobs were abundant. Everybody wanted to come here. And we had, and obviously the money was pretty cheap. The interest rates were really low. And so people would snatch up these houses and they just gobbled them up. And now they're not renting out. There's some construction issues. That's ancillary to that. But now interest rates are really high. And so the pace of buying homes is slowed down. And the people that speculated in the Austin real estate market. You're not supposed to speculate on homes, by the way, right? So got in trouble again, just like in 2008. And you can see a lot of similarities, right? If you look between 2005 and 2012, is that big dip. There was a lot of speculation leading up to that 2007, 2008 bump. Same thing happened in 2021, 22. Same thing. A lot of speculation. Now we're paying the price. Drove the prices way up. Now they're way down, which is a huge gift for buyers right now. All right. So, but what I like about this is that you can see is like the end of this is near. So when people talk about timing, you can say, well, based on patterns in the past, it looks to me like the end of this, buyer situation of, massive incentives and lower prices and price reductions and all that. Like we're probably at the end of that. Probably. This is just for Austin, by the way. A lot of economies and markets around the United States are just now starting to feel what Austin's been in for the last 2 years. Okay, so it'll be interesting to watch what happens in those markets. All right, so we're in a buyer's market. Yes, absolutely. And the sellers know it. Okay, many sellers, not all of them, many sellers have accepted the new normal. There's less competition, as in there's less buyers in the market right now, which is key for you as a buyer. Less buyers in the market right now, it gives you more room to negotiate. We're seeing sellers offer incentives. We list a lot of property, and I would wager that almost 90% of the buyer offers that we get now are asking for cash back to help cover the closing costs and moving costs and any other costs that the loan product will allow. We're getting tons of that. There's rate buy downs, and we're seeing even furniture is being traded and included. So if you can get your financing together, this is the time to act. I'm going to touch on that here in a second. Okay. This is crazy. So like you look at this and you're like, oh yeah, I just want to time the market right. Well, when are you going to do that? That's bananas. What I like about this though, so this is what I call this is buyer activity. All right. So this is the number of homes that have gone under contract for the last 7 days. And this is where you can see the seasonality. Buyers jump in literally right after Christmas. They jump in the beginning on the left side of the chart there. And the buying activity just gets really crazy. And then it starts to taper off towards the end of the year. This is also, if you remember the inventory chart that I showed you, if you were to lay it on top of this, you'll also see the inventory starts to almost kind of do the same curve. So buyers and sellers are trying to think about this at the same time. But what you see, another perspective on this is if you're a buyer, do you want to jump in when all the other buyers are jumping in, or do you want to jump in at the beginning of the year, or do you want to jump in towards the end of the year when there's less buyers and there's probably some pretty frustrated sellers on the market? It's up to you, right? It's whatever matches your motivation and preparation right there. But I think that this is a very helpful chart in understanding the kind of the market that you're entering as a buyer. What's your competition going to look like? And what does the inventory look like? You can see like literally right before Christmas, there's a big spike. It's actually right before Thanksgiving. There's a big spike in offers and contracts. Then another little pop right before Christmas. And then everybody goes dormant for like 3 weeks. Maybe they're hibernating. Okay. So are we in the buyer's market? Yes. Everybody knows it. And this is where I was talking about why it's so great to be a buyer right now. I think that you are, as a buyer, you have experienced probably one of the greatest gifts that there's ever been in the economy, in the history of real estate. We've just gone through, especially in Austin, we've just gone through basically 3 years since interest rates tripled or doubled, somewhere in between, price reductions. We're down 30 to 50, 20, between 20 and 50% in most markets. Some are worse, all right? We have reasonable interest rates, and I'll show you what that means here in a minute. You have willing sellers. You have fatigued sellers too. Can you imagine trying to sell your house? You're 60 years old, and you're like, I just want to retire and move somewhere. Will somebody please buy my house? Right? That's the situation for some people right now. Not everybody, but some people. You have huge price reductions, and you have just a glut of inventory. Is like the biggest gift on the planet for buyers right now to go buy houses. And you have banks still willing to lend money, right? So like there's the money's available, the inventory is available, the sellers want to do deals, and the prices have already come down, right? So this is a huge gift. It's a huge gift. This was the aha when I was looking at all this today. I was like, oh my gosh, we got to be talking more about this. Okay. This is this chart's probably too complicated, but I like it anyways. So this one, it blends in. We have a lot of data here. So we have the white heavy line is the median price in Austin. Okay. For the last, I don't know, 6 years, 5 years there. All right. And you can see where it jumped way up. Right. And then the dotted green line that kind of mirrors it there on a delay is the interest rate. And that's what the government used to mess with. All right, prices are out of control. We got to calm this down. Okay. The blue dashed line, this is the one to probably pay attention the closest. That's a 5% annualized appreciation. That's where prices should be that would make the government happy based from what it was priced in 2020 to today. That's the price line it should be on. So you can see the prices were way above. And they stayed way above for a while. And then just recently, they have that white line is marrying up with the dashed blue line, and that puts pricing back where the government thinks it should be. So that's another indication of why I think we're close to the end of those massive price reductions and all this. Now we still have months and months of inventory that will have to be gobbled up over time. Right now, that's if no other homes come on the market, right? So like there's going to be an adjustment period where the interest rate makes sense. People feel good about their jobs. They're ready to jump back in the market. And this inventory's got to get clawed through. And the reason, I'll get into this in a minute too, a reason why interest rates aren't going to plummet, because when you do that, you get what we had in 2021 and 2022, you get crazy price appreciation. And that's when, people start to freak out when that happens. So what I like about this chart is it shows you that we're kind of on track. Now it's a little behind. The interest rates are a lot closer to 6% now. I didn't have time to update this one, but this is it reinforces the fact that I think that we're kind of near, or actually I think it reinforces it, like we're in optimal buying season right now. Rates are good, inventory is sky high, and the prices are about where the government wants them to be. Okay. So this is a fun chart. This goes all the way back to like 1970, I think. What the 30-year fixed interest mortgage rate is. This information, you can get it online. It's really easy to see, and I'm going to zoom in on the last 5 or 10 years here on the next slide. But we're in the 6% range, and the Fed is trying to balance. They have a very tough job right now. They're trying to balance the job situation. They're trying to balance the trade situation. They're trying to balance inflation, right? Inflation is still too high. And then affordability, right? So there's a lot of things out there that they're trying to balance out, and they're not thinking about, as much as we like to think about it, they're not thinking about real estate agents. They're thinking about buyer affordability, and they're thinking about how do we make sure the economy stays healthy enough for enough people to buy and sell houses, to have the American dream, to own a house. Okay. And they're going to play with it slowly. It's going to be a death by 1,000 cuts to get it right, because any kind of instant reaction causes instant reaction, right? Instant action causes instant reaction. And you get emotionally unstable environments. And we've just gone through that. Okay. So as rates go down, you'll start to see prices go back up because money gets cheaper, more buyers go in. That's more demand for supply. If you're a buyer right now, your job is to focus on your budget, focus on your monthly payment. Okay. This is interesting. This is where we're starting to get into my favorite part. I've been going pretty quick here. Do you guys have any questions? I think that I'm seeing.
I actually have a lot.
Well, lay it on me, Rocky.
So basically, back 2 slides. What does the government base that, like, what the price that they would like it to be at? Like, what is that based off of? Is that like off of the 10-year or?
Yeah. So that's it's a good question. It's it's 4%, but Austin, we tend towards 5%. I don't know where they base why that's the number they want. They want modest appreciation of homes over time. And that's what that blue line pricing is. It's modest appreciation of homes. It's predictable appreciation of homes over time, right? Because you have inflation. Inflation's supposed to be 2%. It's really like 3%. Right. So that's just the number that they aim for. They don't say this. This is what economists have decided and figured out. This is what we're trying to stick close to.
Okay.
And this is what Gary Keller and his team of bandits told me. Good question. All right. So so this is fun. Last 10 years, the median price in Austin was $255,000. 2015. That wasn't that long ago. Today, it's $440,000. The average prices are a lot higher, but I just like to use median because it's the one right in the middle. Okay. So as a buyer, you have to be thinking about, there's a lot of things we think about, I think, as a buyer. And I'd like to hear from some more of them if if you're up for it. But it's like, but it's the question that we get all the time is, well, there's two. Well, like, what are rates are going to do? And like, nobody really knows. I think that it's to be a slow decline in the rates, but I don't think it's going to move around a whole lot. If you look at, well, I mean, when you look at that, you're like, well, I mean, it does move around a lot, but that's over 50 years, right? So imagine if you're trying to figure it out over a 3-year plan, it's like, it's almost impossible to figure out if it's right. Like if you're going to get it right, unless there's some major policy change coming, which is exactly what happened when the economy freaked out. Major policy change. So there's timing. And if you're trying to time it in months, it's very difficult to do. If you're trying to time it over like a 5-year plan, then you know, a 7-year plan, then great. That's great. But that's generally not who we deal with. We're dealing with people that are like, they've saved up their money, they have good jobs, they're ready to buy a house. They just like, they're trying to learn more about what the market's doing and like when to jump in or when to not jump in. My recommendations will always be do it when you're ready. Don't try to worry about everybody else, because you'll be looking for a house. You're going to find the one you like. You're going to find a way to make it work. You're going to work out terms with the seller that are going to work. Now, if you jump in when all the other buyers jump in, well, you're probably not going to win a couple of them, but eventually you'll get there. All right. One of the things we like to do at Byrne Real Estate Group I'm such a firm believer in the American dream and owning real estate. I started buying homes when I was really young. I still have several of them. I've sold some over the years, and I know what it does for a person. That's why I love real estate. I know what it does for a person. Once you get into it, it will change your life. It will change your kids' life, your family life. It changes everything for you. As long as sometimes you just have to hang on to them. Okay. But that's a different story. All right. But what we do to help our buyers is that buying a house is expensive. You got to have a down payment. You got loan fees. You got furniture. You got cars. You got all kinds of stuff. You've got utility changes. I mean, it eats into your cash quite a bit, and we understand that. And so there's many different ways to address how to protect as much of your cash as possible when you're going to buy a house. The first thing that you need to do, any buyer should do this, is to go learn from a trusted source, a mortgage person, a mortgage broker, a real estate agent, us, right? On what are your options available. If you've got X amount of cash and you want to buy X amount of house in a certain neighborhood, what do you need to do to be successful? And you need to start planning that out. Okay. You need to just go find out what are the loan options available to you and how much cash do you have and what kind of deal do we need to work out to be successful, and so that you can win, so you can own a home in Austin. Okay. So we put together a couple of bundled savings approaches. This saves you a little bit of money. We have an in-house lender, Vincent. He's amazing, does a really great job. He knows the deal to make sure you get a lower interest rate and or the best deal around in town. But because he's a mortgage broker, we can farm that out to many different brokers and find the right product for you. And there are so many products out there. There's FHA, VA, conventional, jumbo, qualifying, non-qualifying, conforming, non-conforming. I mean, there's so many. So you have to literally sit down as a buyer. You want to sit down with somebody that has a lot of experience in this and can guide you through what the best options are for you. Then when you start looking at homes and you're doing your homework with your real estate agent, one of ours, one of the things that we have a consultation about, like, what are your priorities? What is your motivation? What's your financial situation? What do we need to do to win? And so we take that, and as your fiduciary, as a real estate, when you hire a real estate agent, you've just hired somebody who is literally your legal agent. They hold your best interest above any other best interest out there, and they know the mission, right? The mission is to make sure you're happy, to make sure you get the best deal that you can get on the house that you love, and then to figure out ways to find other people to pay things for you. Okay. So a lender can do that, a seller can do that, other vendors can do that, builders can do that, insurance people can do a little bit. Like, there's so many different ways for you to get money from people to help you buy a house. The government can help you do that. Banks can help you do that. There's so many different ways, but you have to have the consultation so we can figure out who you are and what you're after before we can figure that out. And then it's just off to the races, because I'm telling you, sellers want a deal right now. Not all of them, but a lot of them want a deal right now. There's some options out there that, your mortgage person will go through with you, and your real estate agent can talk with you also. Adjustable rate mortgages or buy downs. I think they're risky. All right. I like fixed rates because you're locked in for 30 years. And that is such a big peace of mind, especially when rates start to go up. It's such a nice peace of mind to know that you're locked in on a rate, and all you got to do is make the payments, pay the taxes, and keep the house up to be okay. Instead of having to do those things, and then rates go up by 0.5%, and you're like, oh my God, now I got to deal with this, or you're in a 2-1 buy down, you got to spend some money on a refinance down the road. There are people that love the variable rates. I personally, I'm just old fashioned, and I just like to know, like, what am I setting myself up for the next bunch of years so I don't have to think about it. I don't know about you, but I like less things to think about, not more. However, if there's a house out there that you're really trying to get into, and you're in a short-term cycle of things because life's changing and there's changes coming, sometimes the ARMs and the buy downs make perfect sense, right? You just have to evaluate that with your agent and with your mortgage person to make sure you're doing the right thing. I also still live in the neighborhood I grew up in, so I'm clearly all about long-term. That's not everybody is. Any questions there? All right. So down payment help. This is pretty common also. Like, again, you're saving your money and you want to keep it feels good to have cash in the bank. So you want to know what options are out there for you. Just generally, the less money you put down, obviously, the higher your monthly payment's going to be. Okay. There are programs available. They're income-based for 0% financing or down payment assistance. They're income-based. And since Austin's price is so high, a lot of these loans don't work in Austin, because if you're income-based, then you qualify for like a $300,000 house for these programs and specifically. And it's a little bit of a challenge to find homes like that you want to live in. You can find homes like that you want to live in Austin, but they need a lot of work. But it never hurts to ask, okay? The down payment assistance, what kind of incentives are out there? What kind of incentives can you get from combined services, builders, all that. If you sit down with a consultation, then we can run through all of the options that you have for your down payment. FHA is a great program, actually, I think, and they've just raised their limits. They're sky high, so almost anybody can get an FHA loan. It just has a little mortgage insurance premium that goes on top of it, so it raises the rate, but you can get rid of it after a certain amount of time. But the key there is you have low interest rates. All this stuff is contingent upon your credit. There's low interest rates, and then you get a low down payment. And that's really great for buying houses. So, all right, y'all ready to talk about wealth? This is great. This is my favorite part. Okay. These are the benefits of homeownership. And these are the financial benefits. These are not the emotional benefits. It's nice to have a home to go to. Like, it's nice to have a home to go to. It's nice to have a place that you want to improve and you can put your stamp on it, right? It's nice to be the boss of like a little patch of land with your house on it too, right? I mean, there's some emotional benefits to owning a house that probably aren't talked about enough. But if you're on this journey, you're about to experience it, or maybe you've experienced it before, I think that's terrific. You know what I'm talking about. All right. But let's talk about the financial aspects of it. I'm going to show some tables to you here in a minute too that'll kind of help it make sense. Equity from appreciation, you know what that is. If you've owned a home for the last 3 years, you have not experienced this, but you're about to. Okay. Pay down. So this is, you make your monthly payment, that's split into two things, right? You have your interest on the mortgage, and then you have your principal buy down. Okay. And it's interesting because the principal buy down in the beginning is very little, and the interest part of the payment is huge. Okay. And over time, it kind of reverses. You get tax deductions to save you money. There's new policy out there that there's no limit on your property taxes and your mortgage insurance taxes. So and I'll show you this in a second, that puts cash back in your pocket right after you've just paid for Christmas. Okay. And so we'll talk about that. And then of course, if you get a fixed interest rate, you've just locked in your payment for the next 30 or however long you stay there. You've locked it in. So rents are going up, food's going up, gas is going up, everything else is going up. Your house payment stays the same, man. It is awesome. So here we go. Let's talk about this renting versus owning. Man, I have this little, here we go. Perfect. Rent versus buy. This is common when people are talking about timing. This is really helpful in determining like what each month actually costs you that you wait to own a house. Okay. What each month costs you that you wait to own a house. And it helps buyers start to understand like the clock's ticking, but like, indecision or, that's normal. But this piece of the education is, when you're renting, you're paying somebody else, you're making them rich. I know everybody knows that, but you have to just think about that. And every month based on this one, if you actually look down here at the bottom, I'm going to work this backwards. You got $24,000 of, wealth generated every year. So that's like $2,000 a month going on your balance sheet, going in your favor, not going in somebody else's favor. So a comparison I did was $2,800 a rent. I should have done 2,900, but I did 2,800. And in this scenario, gosh, I forgot to put the scenario up. This is a $400,000 house with 10% down and 6.25% interest rates. It's kind of like what the common purchase is right now. Okay. And it did taxes and insurance and your PI. So principal and interest, taxes and insurance. That's what PITI is. Okay. That's kind of like your monthly payment is. If you start skipping those, you start getting yourself in trouble. All right. So you don't skip those. These are kind of equal type houses that you can buy or rent in a neighborhood. The annual cost of renting is $34,000 a year about. And the annual cost of owning, making those payments, is about $35,000 a year. Okay. That should be pretty straightforward. Now, when you're renting, you're not paying off your loan. When you're owning the first year, you only pay off $4,200 your first year on a $400,000 house that you borrowed $390,000 on. Okay. But you made $21,000 or 20, almost $30,000 of interest payments. And when you take so you add up your interest payments of, $30,000 or whatever it is, and then you add up what you've spent on property taxes. That's what it's called state and local tax. All right. So that's where you get your tax savings. Then you have probably, let's just say your income tax bracket is 25%. This is when you're doing your taxes at the end of the year. Okay. 25% of that number of, roughly $30,000, like property taxes and your mortgage interest rate, let's just say, adds up to about $30,000 a year. That's $7,700 in your pocket. All right. That's $7,700 the government is allowing you to put back in your pocket. That's a big deal. By the way, you get this in investment properties too. Okay. So not only do you get that money back in your pocket, all right, you also get equity. Your property on average appreciates 5% in Austin on average. So in that $400,000 house, you have added $20,000 of equity. Okay. So your net cash cost here, so if you take $35,000 and you minus the $7,695 that you put back in your pocket when you filed your taxes, the net cost for you to own that house is actually just $28,000 a year. Now, what stinks is that you got to pay into it up front with the higher monthly payment, and then at the end of the year you get some money back. But at the end of the year, it's cost you less money to own a house, and you've paid down $4,200 of principal, and you've paid down, and you've made $20,000 of equity. So you've earned almost $25,000 just by owning a house. Here's something fun. After your first year, if you think about that, you put 10% down on a $400,000 house. That means it cost you 40 grand. You made a little more than half your money back just in the first year. Pretty dynamite, right? So let's just see what that looks like. I made a few notes here also. So rates drop, prices rise. Today's buyers get deals for the reasons we just said. There's a ton of inventory. Sellers are ready. There's not many buyers in the market right now. There's fewer buyers in the market right now. And we've just gone through 3 years of price reductions. Like, the time to buy is now. This is the biggest gift a buyer's ever had in real estate. Okay. And you don't need perfect timing. Think about, you're trying to be worried about perfect timing. You just said, you know what? I don't want to pay $260,000 for that house in 2015. It should be $255. I'm drawing the line in the sand, which you're allowed to do. Right. Well, that $255,000, that $260,000 house right now, it's now worth $440,000. I don't know about you, but that's a lot better than where a lot of my other money is getting right now. Some of it. Right. So the same in 2008, when the interest rate was the same it is today, the median price was $194,000. Median price right now is $440,000. Okay, it's 250 grand. So it's not about timing. It's not about like picking the perfect year to do it. The whole point of, like, I wish you look at this and like, man, I wish I could have bought every house I could have afforded back then, because look at these amazing results. Okay. So year 1, we just went through this scenario. Year 5, it starts to get a little bit interesting. Wealth generated. I just like looking at the number at the bottom. I don't know about you, but your first year, you make 25 grand. Year 5, you're up 135 grand. Now, it's not money you can spend, but it's money that is there, right? And now you're walking around with a little bit of swagger because you got something set aside. You can't touch it, right? It's there. It's there for later. Year 10, look at it. It grows to 308,000. Year 20, y'all, we're talking 825 grand. Now, these are all averages, 5% appreciation. You got a fixed rate at 6.25%. What's fun is you get a few years into this, you can go get a HELOC and you can go use that money to go buy more houses. I mean, owning a house is such an amazing investment vehicle. And here's something fun. In 20 years, the median, we're talking about median, this is interesting. We're talking about median price ranges right now. In 20 years, the median price range is going to be $1 million. It's just hard to fathom that, I think, just because it's, you're thinking about 20 years in the future. I'll be 70. Yeah, I'll be wondering what all you whippersnappers are doing. Okay, so it's just it's just an amazing vehicle, and all you have to do is you go buy how you just lock in your rate, you lock in your savings, you lock in your monthly deposits you're making for yourself, your future self, your kids, your grandkids, everybody. You're showing them how to do it at the same time. I mean, like the benefits of owning a home are just they're exponential. Any questions so far? Some people have come and gone. This is a lot of information. We're gonna spin this into a video. We're gonna clean it up a little bit. I'll probably get some amazing feedback from my team about it, and we'll do this again. But if there were two takeaways to take from this, are just the financial the financial wealth building machine that owning a house is. I mean, the government set it up for like this a long time ago, right? They want you to be successful, right? But they want to see you put some work into it. So what do you have to do to own a house other than inherit money? Right? You go get a good job, right? You've got to go, you have to have a stable income. You got to have good credit. Like you have to basically be a good person to go in and be able to buy a house. And like, that's your runway for just an amazing life, setting yourself up for success, right? The second thing is right now in Austin is this is the fifth time I'm going to say this. This is the biggest gift a buyer has ever had in Austin. Inventory is sky high. Rates are reasonable. You can refinance them later. I'm going to give you $2,500 to pay off the cost for refinancing anyways, if you buy with us. Right. So we're going to make that super easy for you. Inventory sky high. Sellers are in the mood to sell their houses. They want to move on with their life. They've hung on long enough. They got to go. Okay. The interest rates are reasonable. Inventory is sky high. Sellers are ready to go. I'm going to give you some incentives to help you out with your cash. And it's been 3 years of price reductions, y'all. 3 years of price reductions. Like based on the patterns I showed you earlier, I'm not sure that it's going to go on much longer. And if you jump in when everybody else jumps in, it just drives the price back up. And one of the things that you don't think about when the prices go up, you get into multiple offers. You're locked in for your mortgage. So if you're going to pay anything above it, it's cash out of your pocket to make it right. I don't know if that makes sense, but you're only approved for $400,000 and you want to buy a $400,000 house, right? But then there's multiple offers and it gets up to $450,000, but you're not going to get a higher mortgage because you've maxed out your qualification based on your income and your assets and your credit and all that good stuff. Right. So then to make the difference up, it's got to be cash from somewhere. Right. So if you wait, that's a risk. That's a risk. I think waiting, the bigger risk is that you're just not getting into the wealth building game for yourself. Is that helpful? I hope it's helpful. What I'd really like to do is to see you come in and talk with one of us to get a better understanding of how this works, how we work, how our consultative approach to helping you buy a house is the thing that you need to do right now. We have amazing real estate agents, highly trained, super high skills in real estate. We have an amazing in-house lender that will find you the best deal. And then because you're doing it all with us, I'm going to give you a little money to help pay up for maybe some of your moving or furniture or something like that. Something you can use to buy down rates, buy down your loan fees, something. Owning a house is the best thing you can do for yourself, in my opinion, is the best thing you can do for yourself. So let us help you. Any questions? Right. And the money you can borrow against. Yeah, I mean, yes. So this is good. Like we talked, I touched on this briefly with money to borrow against. It's, you have to build up enough equity, and especially in the state of Texas, they'll only let you get HELOCs up to 80% loan to value. Right. So, I mean, you gotta own the house for a while. You can't tap into that piggy bank until a little bit further down the road. But I mean, if you think about it, it's just it's a beautifully designed system. Right. You want to get okay, we're going to help you buy this house, but first you got to have a job. And in order to get hired for a job, you got to get educated and tooled and you got to contribute to society. I mean, it's just this beautifully designed system, I think. Oh, and then, well, you've owned your house long enough. Well, here, we're going to give you access to some cash so you can use to make improvements or you can use to go buy a house or pay for college or something like that. Right. I mean, it's just like this terrific investment vehicle. It's a terrific financial vehicle. You have to use it responsibly. Right. But it's a terrific investment vehicle. Any other questions? Okay. I told you we'd finish early. Y'all are amazing. Everybody was here. If we can help you, let me know. If you're an agent and you want to chat, let me know. And if you're one of my agents, good job. Enjoy the rest of your night. Sell some houses.
Thank you. This was great.
Yes, thank you.
Good. I'm glad it was helpful. I mean, we'll do it some more, get it a little bit more refined, but I got excited when I was like, oh my God, this is like the biggest gift in history of buying a house in Austin right now. It's 3 years of price reduction. Sellers are crazy, right? They're fatigued. They're tired. They're ready to go. It's cheap enough and you can make the numbers work.
I think the graphs were fantastic, especially for people that are tuning in that are first-time home buyers and don't understand it. I think that was a very great visual. So thank you for that.
Which one?
Yeah, all of them.
All of them? Yeah. I mean, this
Your
one,
graphs are great, Clay.
thank you. You make my heart sing. This one I think is the most important one. The listing inventory is like unbelievably high. Look at all those houses for sale. one of the things that, we've also, our MLS area has spread out a little bit, but I mean, not that much, right? I mean, we're talking about Blanco. There's not that many houses in Blanco.
You know, what's crazy is that in the 80s, the interest rates were at 17%.
Yeah.
17.5%. That is nuts. And their income was not as high as people making money now.
Not even close.
And we're complaining about 7%. I mean, it is still a lot, but
Yeah.
but 17% is nuts. 17.5. It was higher.
Yeah.
So
I mean, that lasted, I mean, 7.5. I bought my first house at like 7.5, and I was so excited to get it. I paid $194,000. I was so excited because you figure out like the budget. The problem with when they jack the rates up so high is that like people's, their payments went from, looking at the same house and they wanted to buy it. And this was, it happened so fast that their payments almost doubled. And so it took it's taken 3 years for like the prices to catch up ish with, the new reality. And so we might bump along a little bit here, but it seems to me like we're pretty close to the end of it. Maybe.
yeah, this was
Yeah.
great. Thank you so much, Clay.
That's a good point. I should have added, what the interest rates were and what the average income was back then too. So I'll add that to the next one.
And the average house, I know it
Yeah.
was a lot lower back then, but still.
Yeah. I mean, affordability is a big deal. I mean, the jobs thing, there's so many variables out there right now. And another thing, we still have a housing shortage. So once all this gets gobbled up, they're not building enough houses right now. So once like this inventory, when they can, that's one of the reasons they have to feather in this interest rate adjustment is because once this like existing inventory gets gobbled up, there's not enough inventory. They have not been building enough houses for like 15 years, right? So this is exactly what happened. This is why the ramp up, one of the reasons it happened. So there's like this other piece of this is like the long-term outlook, like it's dicey. So that's like, I think we got to get used to 5.5 to 6.5% interest rate. I just think we have to get used to it. All right. Y'all are amazing.
Thanks,
If we can
Clay.
help
You're
you-
amazing.
Good job, Clay.
Thank you.
You guys.
Yeah.
See y'all.
Bye.
Bye.